Hello, everyone. It is January 26th, Friday, 2024, and this is the video for today. So we're going to go over the market first. We're going to go over the picks from the previous videos. I'm going to go over some of the positions that I was open personally, how I closed them, and then I'm going to give a pick for this video. So let's start with first what the market's doing on a longer term basis. Again, we're still bullish. Nothing has changed materially, fundamentally, and technically. On a shorter term basis, we've had this breakout that's had really nice fall to the upside. New all-time high. No bag holding over here. You can see the 8 EMAs sloping up. This is a really nice way to see the strength of a trend. And if a stock is a little bit too overextended. Now, we know that the market gapped up here on the 24th. Tried to make a new high. We had a marginal high on this day. So let's take a look over here. Tested the gap, went open, marginal new high, and then we sold off to make a new low of the day. The next day we were digesting some of the gains, soaking up some supply, and then we retested that level again back today, poked a little bit higher, and now we're getting rejected back off again. So what this tells me is that there is some resistance, there is some bag holding over here, and you have to be a little bit more cautious with your shorter term swings. So what I'm doing right now is defining a bigger channel, a multi-day channel on SPY over here, just connecting these lows. Ideally, you want the channel to be parallel. So what I'm noticing is we have this very wide bullish channel over here that's forming. And there could be money to make, opportunity to make money on both sides. Although if I'm a novice, I'm still going to favor the long side. So the context here is that we've gapped up. The price action has been strong, but we have to keep in mind what's happening next week, which is some mega cap tech earnings and the FOMC statement. So mega cap tech has rallied into their earnings generally. So let's take a look at some of the mega cap tech to get our bearings. We have Amazon over here. I don't know why I clicked it because the chart's up. Amazon has been very, very strong. Let's take a look at Meta. Meta has been strong. Tesla is the oddball over here. Like we mentioned the other day, pretty weak from earnings. Google also been very, very strong. Microsoft strong as well. Joined Apple as a $3 trillion market cap company. Apple not as strong as the others, but we had a nice move here after it confirmed support, hitting resistance at this level. And NVIDIA, the latest of the Magnificent Seven, very steady move up, as you can see in hindsight. Digesting some of the gains, it pulls back to its 8 EMA, but barely. I mean, it has not touched it yet. So some very strong move coming into NVIDIA. Still some time for earnings. So mega cap has generally been pretty strong. So that's kind of the components driving this today. We know that mega cap will lead the rally, tech will lead the rally, and then when tech starts to see some profit taking, other stocks should participate in the rally. Things like retail, finance can be on and off depending on what you're in. So that's something to keep in mind on the component side. But the context is we're bullish, but there is some binary news. There's some major events that the market is waiting on that will decide if this all-time high is justified, right? If I'm a institution, I'm thinking, okay, well, SPY's at an all-time high, but we have mega cap tech earnings coming up next week. I have, Microsoft, I have Apple, I have Meta, Google's coming out, Amazon. So would I really be chasing here at this level? I mean, probably not. If I buy too much and the earnings are not what I expected, they're more bearish, then I don't have a good, I don't have a good price. I'm going to be losing money. I'd rather reduce my exposure, see what these are going in, and then see what the earnings come out, and then go into that. So that's why we are doing the same. So with that in mind, we know that on our swing longs, we can still take some, but we want to have a more shorter term time frame in mind. You don't want to be overloaded on an FOMC statement that turns out bearish, right? You are going to be covering your positions, unable to really relax quite well. So that's the shorter term time frame. That's the shorter term context. What I think is we could see a pullback. We could see some compression around this area as the action dies down before FOMC. The other thing is we could see a gap up and then another fill. These gap ups have tend to reverse. Gap up to a new all-time new high. We get filled in. See a little bit of a pullback. Gap up, pullback. So if we gap up, I would take profits on the short-term swings and look to stay in the sidelines. Look for maybe some day trades as we get into the FOMC statement and the mega cap tech earnings. What's happening with the market today? Well, we closed yesterday in a pretty strong note. We had its choppy move down and then a decent move up here. Volume was okay. Today we opened fairly flat, tested this level right here, and then we challenged this previous high, which I drew on this line right here. Tested this high, and then we're fighting. We had a double top, lower high, lower low in SPY, and then we got this sell-off here, a little bit of flush of some bullish specs who bought in at this rally. The market is now testing the low of the day for support. You can see that we poked through a little bit and we're finding some support. What I want to see to get long is a bullish 1OP cross, a bullish LRSI cross, and a nice long green candle that cuts into this halfway point. That tells me that buyers are interested. If buyers can't get it going over here, I know there's going to be more downside, and we could expect another bearish reversal like what happened yesterday, where we moved down. See, made a new low of the day. Buyers came in, new low of the day. There's still some selling going on over here as people who were short or who bought at the low of the day over here get flushed out. Looks like there's not a lot of low of the day stops because we didn't poke through and then immediately move back in. But we know that we're not super bullish because we had this move down, right? If we're at a super bullish day, again, go back to what SPY was doing a few days ago. Let's go all the way back here, right? This is a bullish day. There's no deep retracements. There's small pullbacks. There's steady buying. There's good volume. This is a nice bullish day. This is choppy price action day. This is sideways motion. This is garbage. This is a bearish reversal where we hit resistance. We have a double top and we see strong, steady selling, or not super steady, but deep, better selling price action on the downside than the buying pressure coming up on the upside. So those are the clues to watch for. Right now, selling pressure is a little bit stronger here, right? We erased all of these gains with two long red candles. So I'm not doing anything right now. I'm just waiting to see if the market can get a close above its 8 EMA and the M5, kind of get into this range a little bit here, confirm this support, and then we can start to enter longs, only super strong D1s, only really good M5 charts. So that's my market bias right now. It's a little bit neutral, and I'm waiting to see what the market does. So let's go over the pick from the last video. Which is HLT. We're going to give this a second to load. And sometimes we get a little bit of a freeze here. So while it's loading, I'm going to tell you some of the stocks that I was eyeing here, or how I would approach this. In this drop, I'm looking for stocks that have held the gains. They should be above VWAP. They should have relative strength, and they should have been strong in this initial motion here. If they got taken down by this a little bit, that's okay. It gives me a good price. And I know that wasn't stock related, but it was market related. So I want to find stocks that have really nice relative strength. You can sort by this real relative strength M5. If I store it from the highest value to the lowest value, that gives me a great stock price. So this is HLT over here. You can see it's continued higher. And it's held up the gains pretty well. It's done very, very well. And it's just been steadily grinding up, right? Very predictable price action. It's not a mover, but it just keeps going and going and going. This kind of stock rewards patience. You can see how it's held VWAP over here while the market's been really completely tanking. So I still like HLT. There is this high plus trend line that's coming into here. Let's see where this is coming from. I mean, this is okay because the candles are so close together here. I don't put as much value into that. I'm not overreacting. So I think this is still a fine hold as long as the market, again, doesn't completely tank. We start to make some headway over here. So I still like HLT. I would still hold it over here depending on what your price target is. If you bought yesterday when the video came out, let's say you got it here at like 191.50. Let's say you got it at 191.50. ATR is $2. So if you get something like 194, that'd be really great. You know, even if you want to get in 193, hit that level a couple times here on the retest, that also works quite well. Depends what your target is, what your duration for the trade is, what your expectation for the trade is. We know it's not a crazy mover. But because it's steady, because it doesn't get too overextended, I think we have more protection going into the FOMC statement. So HLT has been pretty nice. I'm going to recap some of the positions that I took profits on earlier today. So let's look at our favorite stock, AMGN. This stock has been a pain. It's not been awful, but it's not been terrible. And I took profits earlier today. I took profits around here, around 310.60, a small profit. And the reason is this. We're still strong technically, but I've given the stock enough time. I got the stock in at January 8th. It's January 26th. The stock has gone nowhere. What's the market done since January 8th? It has rallied up, closed 474, hit a high today, 489. Market's gone up $14. Amgen has been flat, right? If you have a lot of buying power and it's eating up your buying power, take the small win. The stock did not expect it. It did not move what you wanted it to move. It could still make that move, but not in the time frame, right? It should have made this move faster. I was willing to give it some time, willing to digest the gains, but buyers are simply just not as interested right now as they should be. Yes, there have been some weaker healthcare earnings. It's not been the strongest section recently. There could be sector rotation in the future. If we get another breakout, I'll re-enter, but you have to weigh the time factor of the move. I was reading Pete's article today on stops, and he talked about the time stop, having an expected time frame for the move. A lot of my swings happen within a few days, 2 to 4 days. A lot of my swings should be in profit. So if that did not happen, and we get this LRSI cross down, right? I know I have to temper my expectations. My stock did not do what I wanted it to do. I was kind of wrong about this, and even though I was wrong about the stock, I still took small profits. So I will take that as a win. Next stock over here is Walmart. So took Walmart over here. Again, didn't do what I wanted to do. Didn't move up with the market on Jan 18th, right? Market took off, right? Moved up, I don't know, $7, $8, something like that. Walmart had to test support over here, and we launched back up pretty quickly. Now it's still pretty good. You can still hold on to it, but I took profits on Walmart earlier today. Some small profits, maybe like 63.20 or something like that. I took tiny profits in Walmart because, again, it didn't do what I wanted to do in the certain time. LSR is starting to cross down, which is confirming the price action. We have this high plus trend line coming into play that's being respected. I knew it was choppy. It could still give it some time, but why not just take the small win here, reduce some of the risk going into the big events coming up next week. So took profit on that. Now yesterday, I took a bit of a gamble-y play, as I would call it, on Netflix. It wasn't a pure gamble, but it wasn't really in my system. And I think this is an important point to make over here. So here's a context for Netflix that I saw. You see it had a strong earnings gap up. And let's go to an M15 basis just so we don't have to, we can kind of see this chart a little bit more clearly. So we had a long earnings gap up on Netflix. And let me just remove this. And you can see how it held up pretty well, given that the market was tanking. It did not make new lows. It actually made, if I drew a line over here, it made higher lows, right? It also made lower highs. So it had this wedge that was coming in as the stock was digesting the gain up. When it broke this wedge to the upside, broke to the high of the day, tested this high of the day here, Netflix got on my radar. Okay, so I looked at this, and here's what I saw. The market moved up yesterday, but look at the price action on Netflix versus the price action on the market move up. Yes, it moved up, but it had some challenges throughout here. The volume was low. Look at this Netflix move up here. Stacked green candles, rising R volume to the end of the day. So what I was thinking is, okay, well, this stock has held the gains while the market was waffling around, and it wants to go higher. But it's not technically part of my system because these earnings move initially are very volatile, right? What I was risking here is if I was wrong, my stop would be this low here at 537. So I had a decent premise for the trade. It wasn't an awful trade, but my risk reward didn't quite justify what I was doing. I took Netflix here at 562. So if my stop here was 537, that is a $25 move I'm willing to withstand on Netflix, about a 1.5 ATR move. Instead, and what I was targeting here was a half ATR move of about $8, 570. I said, if I get 570, I'm good. So if I am willing to take $25 of a loss, $8 of a win if I'm technically right, that means I have to be right more than 75% of the time. Now, my win rate is above 75% so far from this next phase of my one-share trading journey. It is above 75%, but the risk reward wasn't super great, and I acted pretty quickly, but it wasn't the planned out trade I normally like to take. So, that's kind of why I wasn't super fond of the trade, and now it did work out. So that's sort of the on-paper defense of Netflix. Here's what was really happening in my mind. Really fast move, rising R volume, broke through the wedge, yeah. But it reminded me of AVGO. It reminded me of AVGO right here. Now, if I were to zoom in on December 8th, which would be pretty tough, but let me see if I can get there and just take out, let's just take out some of these series right now so we can clearly see the chart. All right, and I'm going to go all the way back to December because it basically matched that price action that I saw in AVGO. Rising R volume after support, super strong price action. You have time for this move. So I know this is taking a while, but I think this is important. Am I out of... Okay, I may not be able to go back as far. Let's see. I should have 2 months. Okay, looks like I have 1 month of M15 data, so I may not be able to go back that far. The point is here, though, AVGO had a very similar move here towards the end of the day, rising R vol. So when I saw Netflix, I mapped what happened in AVGO onto Netflix, and I was doubtful because I didn't know if that mapping was correct. It ended up being right, which means I can trust my intuition a little bit more in that moment because now I have an additional example of my trust in my own ability. So that was the real reason internally why I was able to take the trade so fast. And then I had to go back and cognitively justify it in my head versus relying on the quick pattern matching ability. So I labeled this as a gamble in my journal. I don't think it was like a horrible gamble. I think it was a decent trade. I don't think it was an A+ trade. Ended up being super right. So maybe in the future this could be an A+ trade. And it looks like, I was even originally thinking to go for 580 for a better risk reward, but I didn't know what Netflix would do. I didn't want to push my luck. So I got the $8 on this stock, which was a pretty nice move. It did end up getting to pretty close to 580, 579.64. So ended up getting pretty close to it. But you can't take all the profits. I'm glad I got the move right. I entered here and I got out over here and I took profits pretty quickly. So that was a nice one that I took. I also entered JPM. So what I liked about JPM, we had this bull flag after earnings. It on this gap down, it immediately filled in this gap, held a VWAP Q, and then broke through this resistance level here. And you can see how it's testing that resistance level today. So it's got to work off some of the supply, but it's been very strong relative to the market. So what I did was I started with JPM in a quarter position, and my goal is to add to this trade and build it up, right? I want to get better at adding to my winners. So as long as this is holding and it's showing support, then I will be adding to this trade. Now the market's still going down. So what I need to see is relative strength during a market decline. That's my add criteria. Boom, we're getting. Then the market has to find support. We're not finding market support yet. So the threat of JPM breaking through this barrier still exists. Okay. Once the market starts to meander and waffle around, then the chance of JPM breaking support is substantially lower. I can feel more comfortable adding to the trade. This is an average down technically, which I don't love doing. I'd rather add an average with because it kind of forces you to push winners. But I'm not bottom picking. I'm averaging down because we have relative strength, because we're finding support at this D1 resistance, this D1 level, right? That's giving me a lot of confidence in the trade. So that's the trade I took. My target here is this high plus trend line. We have a lot of time after earnings. This is a steady mover, as you can see. So I would like to see this steadily climb up and hold the gains. I'm willing to withstand it during a pullback because I like the price action on this. The price action has been super steady. We've digested some of the gains into earnings. And, we could see that next leg higher over here. Here's the other ones that I took. My WDC earnings time spread. I took it at 45 cents. I got out at 59 cents. So about a 25-cent win on a time spread, which I will take. It fell in pretty in line with earnings. The other, and I'm going to see what the other trades I took. I sold a couple here. So the other one I took was on FTNT. So FTNT was a position I took here. And here, it's a pretty interesting price action. So I took it here. It was holding, had really nice relative strength to the market, so I added a little bit. Yesterday, it gapped up, immediately sold off to this level, and could not get past this 66.60 level over here. So I saw this, and it had some resistance here. It's moving up with the market, and I saw it poke through, and I was like, all right, I would like FTNT to break through this level with this market move, but it couldn't. So I exited for a small win on half my position here. I still like the D1. It still has time. It's a little bit choppy. It has to digest some of the move before we get the next leg up. Also at this time, at 12.25, what was happening with the market? Okay, we had a bit of a double top, right? I think I took the small wins somewhere here at 11.45. 11.45 with the double top forming over here. So I thought, all right, market might be rolling over. FTNT is hitting some resistance. Let me reduce my risk on this position, take some small profits, and then, see if it holds, right? See if the market holds. So that is a open position, but a tiny win here. It didn't do what I wanted it to do. I also know that the cyberspace, before I get into NVIDIA, the cyberspace has been seeing some profit taking. It's slowing down. It's been absolutely red hot, right? If we look at, I'm going to go to cyber here. D-Dog has been nice today. Okay. But look at the cyberspace here. They've all had pretty nice runs. Let's look at Okta. I think Okta may be an exception. Yeah, Okta didn't really participate. Let's look at PanW. I mean, absolute zoomer. Traded this here, traded this here. ZS, again, also moving up. Crowd has been really, really popular. Net, people have been trading Net. Net has not been as strong in this sector. And FTNT has also been participating. But the sector is losing a little bit of luster. There's a little bit of profit taking. So I have to keep that in mind. All right. Now, NVIDIA exited my put credit spread for 2 cents. So I entered for $1 over here, the 475, 470 put credit spread. This green line represents what I saw. And then I exited for a 98% win or a 2 cent debit on the position. Here's my reasoning. Because I don't have buying power tied up, I want to hold the put credit spread until expiration, right? I'm not trading using all my buying power. If I had a lot of buying power tied up, I may have taken a slightly smaller win earlier because NVIDIA had made a massive move up, right? This move up here, I didn't expect it. I thought it would still be a little bit choppy, but it broke through and really continued up very, very well. So you could take, 80, 85, 90% profit here if your buying power is really tied up. The thing is with these put credit spreads that when you take smaller profits, you need a higher win rate to justify that, right? If you take the full profits on this and you set up these put credit spreads correctly, you only need a 75% win rate to be profitable on them. When you reduce the exit price of that, right, instead of taking the full 100% credit, you start to take 90%, 80%, 75%. You need a higher win rate to justify that statistically over the long run. So in my head, I was like, all right, I'm not worried about buying power, but there's 2 weeks until this spread expires, and I have a 98% profit. So if I take this 2 cents of debit right now, I'm really only losing out $2 of profit. But I save myself the risk of what could happen on, those 2 weeks. I believe the risk of that is extremely minimal. So that $2 is really that, hey, there's zero position management. I don't have to worry about this at all. I basically took the full profits in a shorter time frame on a big move up. So the $2 I really paid for was to not worry about this for the next 2 weeks. That's what the $2 cost me. So the NVIDIA put credit spreads pretty well. I believe that is mostly all the positions I have. Let's look at the other picks quickly. And I talked about most of them here. So let's remove AMGN. I took the profits on the rest of Guild yesterday, like I mentioned in the video, on this gap resistance that could be happening. So ultimately we took a big loss, but I took half the loss here, half the loss here. So I reduced the loss on that position. ELF is also a tough one. ELF has just not been able to get through this D1 level. It has struggled. It has struggled. It has struggled. It is just, and I'm going to zoom out to an H1 here. Let's see. Yeah, I mean, it's not been able to get through this 160 level. So again, if you want to reduce the risk, right, if you took it at like 163, 164, something like that, you could probably take the loss here on ELF. I think it just hasn't been doing what it wanted to do. It's losing relative strength. It's losing that LRSI across. If you want to hold it to earnings, it's fine. But I am going to log ELF as an L in my book. I'm going to take the L on this. And we're going to remove it from here. And we're just going to keep HLT because HLT has been pretty nice. And I think it will continue to be pretty nice. So with all that being said, what is the pick for today? Well, first off, on our swings, I want to see the market close above that prior high. Right now, we are not doing that. Right now, we have really what we're doing is confirming this resistance here. So I'm less likely to pick swing longs. If I were to do a swing long, you would have to do 10 out of 10 D1 chart is obvious. 10 out of 10 M5 price action, obvious. Then smaller size because the market is not moving up. It's moving sideways, right? It's compressing. The price action is kind of strong both ways. There's profit taking at this level. This channel has a slight bullish bias, but it's wild. It's not wild, it's wide. So I need a very, very strong stock. There's a couple of stocks that, let's see if I tagged some today. one thing that came to mind here for me was Spot. Spot has been pretty strong in this recent market decline, inching up higher, and it's a grinder. It's not to overextend it. Remember, we don't want overextended stocks because we could get trapped when we have to reduce exposure next week. I like Spot. There's still earnings. There's a lot of earnings coming up on 2/6, so there is quite a bit of time. So Spot is decent. MRK had a nice breakout today, but it's not super strong. And it's doing pretty well considering the market is tanking. But I like to see a bit of a stronger breakout. Earnings is pretty soon again, so you don't have a lot of time. Ally is very, very nice. So nice move up here, holding the gains, holding the relative strength pretty well relative to the market. And it's broken past this level here, not too far extended. LRSI is crossing up, gaining relative strength. Let's zoom out over here, see if there's anything coming into play. There may be some book to this gap resistance here. There is this high minus trend line, so that could be a factor. Has about $1 ATR. So right now, Ally would be my top pick if I were to go long. Toast was something I was looking at for a lotto. We may not have the conditions for a lotto, and I want to wait closer to the end of the day. But Toast has been holding up really well in this market drop. Any market move sideways or higher, this stock will continue to move up. So Toast would be a lotto pick. The other one I was liking a lot was Amazon. You can see here Amazon is holding VWAP very, very well. It does pull back, so it does follow the market a little bit more because it's a mega cap tech. It broke out through this high plus trend line. There is earnings. Amazon could set up nicely again for a lotto or a day trade. And then let's look at Netflix. Netflix also super great, holding its level very nicely over here. Again, could set up pretty good for a lotto day trade. Again, but I wouldn't swing this though. Pretty overextended. I wouldn't swing this. I would keep it short term. So in terms of short term moves, I think my top pick for this video is going to be Ally. That's going to be my pick. So I'm going to add it to my picks. For a short-term swing, it's post-earnings, strong price action, good volume, technical breakouts, and it has been climbing up higher when the market has been doing nothing. So I like this move here. Do note that Ally is a fairly choppy stock. Doesn't really do a ton. So I would keep this pretty short-term swinging overnight, 2 or 3 days, and try to get at a good price. Buy these dips down, right? Ally, look at this, doesn't go straight up or straight down. It has these dips, right? So you get this LRSI cross, it's above VWAP, you confirm some support, get in on these dips. Don't chase the stock. So my personal plan would be, I would set an alert right here, right? If the stock can start to get out of this compression, break through VWAP, I'm going to look to enter this stock for a swing. It's a good stock. it's a good M5. I would do a smaller term size, a shorter or smaller size given this price action. That's my pick for today. I hope it was helpful, and we will review Ally and HLT next week.